Most LLC owners are paying themselves wrong, and the IRS has a specific court case it references when it audits people for exactly this. I'm going to walk you through the right way to pay yourself from your LLC, the one mistake that can void your liability shield retroactively, and the two tools I use to stay compliant. Links for both are in the description. They support the channel at no extra cost to you. Mercury is giving $250 back when you deposit $10,000 into a new business account, and Northwest Registered Agent handles LLC formation for $39. Before you pay yourself anything, there is one thing that is not optional. You cannot run business income through your personal bank account. This is called commingling, and it is the fastest way to lose the liability protection your LLC exists to give you. Courts use something called the alter ego doctrine. If a judge decides your business is just part of your personal alter ego, evidenced by you paying groceries from the same account you invoice clients from, they can disregard your LLC entirely. That is called piercing the veil, and when it happens, your home, your savings, and your car are all fair game to pay business debts. The fix is a dedicated business bank account that you never mix with personal spending. If this is your first time doing this, the one I use is Mercury. Free to open, no monthly fees, and it automatically categorizes transactions so you are not retrofitting labels in a spreadsheet on April 14th. And a small bonus, the $250 cashback offer for a $10,000 deposit is in the description. How you pay yourself depends on your tax classification, not just the fact that you have an LLC. If you are a single member LLC, the IRS treats you as a disregarded entity. You and the business are one for tax purposes. You pay yourself by transferring money from the business account to your personal account and labeling it an owner's draw. Simple. But here is a tax reality. You are taxed on the entire net profit of the business, not just what you draw. If the business makes $50,000 and you only draw $10,000, you still owe taxes on the full $50,000 plus 15.3% self-employment tax on top of that. Every transfer has to be documented, which is exactly why that Mercury account matters. If you are a multi-member LLC with a partner, each person takes draws against their ownership share as outlined in the operating agreement. There is also something called a guaranteed payment, a fixed amount paid regardless of whether the business is profitable that month. The thing to know is that guaranteed payments are not eligible for the 20% qualified business income deduction, which means they can cost more in taxes than a properly structured distribution. If you have partners, get your operating agreement reviewed before you assume you are set up correctly. Here is the one I told you to stay for. Your LLC can be administratively dissolved by your state if you miss an annual report filing or fail to pay a state fee. No phone call, no warning letter, your state just dissolves it. And you might not find out for months. When that happens, your business automatically converts to a sole proprietorship or general partnership. Your liability shield disappears, not just going forward, but retroactively for every debt and lawsuit that comes after the dissolution date. You think you're protected? You're not. This is the compliance requirement most LLC owners ignore because it is not a one-time task. It is ongoing every year for as long as your LLC exists. If you haven't even formed an LLC yet, here's another recommendation for filing. Northwest Registered Agent. They manage the registered agent requirement and send compliance reminders so you never miss a deadline. If your LLC is not formed yet, they do the whole thing for $39. That link is also in the description. A few things worth knowing if they apply to you. If your net profit is consistently above $50,000 to $80,000, talk to a CPA about electing S-Corp tax treatment. You pay yourself a reasonable W-2 salary and take the rest as distribution. Distributions are not subject to that 15.3% self-employment tax. On $40,000 in distributions, that is $6,120 back in your pocket per year. The administrative costs run $1,500 to $3,000 annually, so the math only works above a certain income threshold. And the 60-40 rule you may have seen online, 60% salary, 40% distributions, is not an IRS rule. The IRS uses market rates and your actual job duties. The Watson case I mentioned at the top is the case they reference when auditing this. Also, do not issue yourself a 1099 from your own LLC. The IRS views it as an attempt to sidestep payroll rules. And if you are an S-Corp owner with more than 2% ownership, your health insurance premiums need to run through payroll and appear in box 1 of your W-2 to be tax deductible. Most owners pay this personally and lose the deduction entirely. Okay, if you have any questions about this process, let me know in the comments. Like we said, there are 2 tools that will help you both file your LLC and manage the money it makes for first-time filers. Bye!